You've been in your home a few years now, the equity is sitting there, you want more space, maybe a bigger yard, a better neighborhood, a home that actually fits your life right now. But here's the question that's got you stuck. Do you sell your home first and risk being homeless while you search for your next one? Or do you buy first and risk carrying two mortgages at over 6.5%? This is a move-up buyer dilemma, and in 2026 in Henderson specifically, getting this wrong can cost you tens of thousands of dollars or cause you to miss the home you actually wanted. Today, I'm breaking it all down. You're going to walk away with a clear framework, real numbers from the current Henderson market, and a step-by-step guide you can actually use. And stay until the end because I'm giving away a free downloadable guide with worksheets so you can run your own numbers. You'll see the link at the bottom of this description.
I'm Chruszhet Hydron. I've lived in Las Vegas for over 40 years. Welcome to my channel where local insight meets real guidance.
Look, I grew up in Las Vegas. I consider myself a true Nevada native. I've watched this market go from boom to bust and back again more times than I can count. And right now, the move-up conversation is the single most common thing I'm hearing from homeowners across Henderson and Las Vegas. The rates have people second guessing everything, but here's what I want you to take away from this video before we even get started. High interest rates don't mean you can't move. They mean you need a smarter strategy than you needed 2 years ago. So let's get into it. Let's talk about what's actually happening in the Henderson market right now because the context matters. As of June 2026, the median home price in Henderson is sitting right around $500,000. Homes are taking an average of 60 plus days to sell. That's up from 52 days a year ago. And inventory for single family homes is at approximately 2.8 months of supply. That leans slightly towards the sellers in the mid-price range, but this market is becoming more balanced by the quarter. And mortgage rates, the 30-year fixed in Nevada is hovering right around 6.6% as of early June 2026. That's the new normal, and I know that stings if you bought or refinanced at 3%. That rate lock-in effect is real. It's one of the big reasons inventory has been suppressed. But here's the thing a lot of people aren't talking about. Henderson homeowners who bought before 2022, most of them are sitting on serious equity, and equity is leverage. Equity is your move. The question isn't whether you can move, it's how you engineer the move so you don't leave money on the table or end up in a position you can't get out of. Let's start with scenario A. Sell first and then buy second. This is the most conservative path, and for a lot of Henderson buyers, it's the right one. Here's the core advantage. When you sell first, you know your number. You know exactly how much equity you're walking away with. You know your down payment. You go into your home search with clean, non-contingent offers, and in a market where sellers are getting pickier, that matters. You also avoid the nightmare of carrying two mortgage payments simultaneously with rates at 6.5% or higher. Holding two properties even temporarily adds up fast. We're talking thousands of dollars per month in carrying costs. Now, the fear most people have with this strategy is obvious. What if you sell your home and you can't find your next one fast enough? Where do you live? This is where one of my favorite tools comes in. It's the rent back agreement. Here's how it works. You close on the sale of your home, the buyer takes title, but you negotiate to stay in the property as a tenant, typically for up to 30 days, because at this time we're already looking for your home. You're paying the buyer rent while you search for and close on your next home. So if this is done right, a rent back gives you a clean sale, maximum cash in hand, and a 30-day runway to find your next home without the pressure of needing to move twice. So who is a sell first strategy best for? It's best for you if you don't have substantial cash reserves beyond the equity in your home. If you're risk averse about carrying two mortgages, or if you're highly motivated to get the best possible offer on your current home without a sale contingency clouding the picture. Okay, so now let's flip it. Scenario B, buy first, then sell second. The core argument here is simple. What if the right home hits the market and you're not ready? Move-up buyers in the Henderson market, especially if you're looking in the $550,000 to $750,000 price range, know that inventory in your sweet spot can be thin. The home you want might come up once in the next 6 months, and if you're waiting to sell first, you might watch it go under contract while you're still prepping your house to list. The buy first strategy is about not letting perfect timing cost you the right home. But it does come with real financial risk in this rate environment. And to manage that risk, you need to understand the 3 rules available to you, which is what we're covering next. Okay, so there are 3 main ways to bridge the gap if you buy before you sell. Let's go through all 3 of them. Tool number 1, the bridge loan. A bridge loan is a short-term financing tool, typically 6 to 12 months, that uses your current home's equity as collateral. You use it to fund the down payment on your new home before your old home sells. In 2026, bridge loan rates typically run at prime plus 1.5% to 2.5%, which puts you at roughly 9 to 11% annually. The total cost for a 6-month bridge runs approximately $13,000 to $17,000. A 12-month bridge can cost $23,000 to $27,000. Now that's not cheap, we know that, but for the right buyer, someone with substantial equity and a specific target home, it can be absolutely worth it. You're paying for certainty and speed. So tool number 2, the HELOC, which is a home equity line of credit. It lets you tap your existing equity before your home sells. You draw from it for your down payment, then you pay down when the sale closes. Here's the critical thing about HELOCs that most people don't know. Lenders will freeze your HELOC the moment your home goes on the market. If you want this tool available to you, you need to open it before you list. HELOC rates fluctuate, so make sure you confirm those rates with your lender. I'll say that again because it's important. If a HELOC is part of your strategy, get it in place now before you list your home. Once that listing goes live, most lenders won't touch it. Tool number 3, the sale contingency. A sale contingency means your offer on the new home is contingent on selling your current home. This is the least expensive option up front. There's no bridge loan costs, no HELOC to open. The downside, it weakens your offer. Sellers, especially motivated ones, generally prefer non-contingent offers. You're adding a layer of uncertainty to their sale. If you go this route, you can strengthen the offer in other ways, maybe a compelling pre-approval letter, an escalation clause, a flexible closing date that works for the seller, or earnest money that signals you're serious. In a market like Henderson, where homes are sitting 60 plus days on average, contingency offers are more viable today than they were in 2021 and 2022. Sellers are negotiating again, and that's good news. Okay, so let me bring this all back to your specific market. Henderson in 2026 is not a panic market. It's not 2021 bidding wars. It's a more measured, more balanced market, which actually gives move-up buyers more room to negotiate smart deals on both sides of the transaction. Homes are sitting longer. 60 plus days is your window as a buyer to negotiate. Mid-range single-family homes that are in the $500,000 to $750,000 range are seeing the tightest conditions, however. That's the sweet spot where move-up buyers from starter homes are competing with each other and with relocation buyers coming in from California and the Pacific Northwest. Speaking of which, the relocation wave into Henderson from California is not slowing down. Buyers from California are saving anywhere from tens of thousands to $80,000 or more per year by making the move, and they're not waiting on the sidelines. They're writing non-contingent offers with California equity. That's your competition. What does this mean for the sell-first strategy? In this market, a well-priced, well-presented Henderson home will still sell. It might take a month or 2, but it will sell. The sell-first path is very executable right now. What does it mean for the buy-first strategy? With 60-day average days on market, you have more time to close on a purchase, list your home, and not feel like you're racing against the clock every day. The market is giving you some room to breathe, so use it wisely. All right, so here's the framework. These are the 5 questions every Henderson move-up buyer needs to answer before deciding whether to sell first or buy first. Write these down, or better yet, download the free guide. It has worksheets for all of this. The link is in the description below. Question number 1, how much equity do I have and how much of it do I need for my next down payment? We're going to get a current market analysis of your home. Know your net equity after closing costs and agent fees. If that number alone gets you where you need to be on your next purchase, selling first is much safer. Question number 2, do I have cash reserves outside of my home equity? If you have 6 months of reserves plus a down payment already saved separate from your home equity, the buy first strategy is far less risky for you. If your equity is your down payment, selling first gives you more control. Question number 3, how competitive is my target price range right now? If you're looking in a price range where homes get multiple offers and go quickly, the buy first path has a stronger argument. If your target price range has healthy inventory and longer days on market, you have more flexibility to sell first and shop at your pace. Question number 4. What is my tolerance for carrying 2 mortgages even temporarily? Run the real numbers. If you ended up holding both properties for 90 days, what does that cost you at today's rate? Can you absorb that? Is it a hardship or a manageable cost? Be honest with yourself. Question number 5. Am I trying to move into a specific community or home type, or am I flexible? The more specific your target, the stronger the case for buying first. The more flexible you are on what you buy, the easier it is to sell first and then search with cash in hand. 5 questions, work through them, and if you're not sure how to run the numbers, that's what I'm here for. Also, if you need recommendations on great local lenders here in Henderson, I'm happy to connect you with the right people. Just reach out to me directly and I'll point you in the right direction. Here's my bottom line. There is no universal right answer in this decision. What I can tell you is this. Both paths are workable in the current Henderson market. The move-up buyer who plans it well, who runs their numbers, knows their timeline, and has the right strategy in place wins. The one who waits for rates to drop to 3% before making a move may be waiting a very long time. The opportunity is here, the equity is there, the strategy is what separates the people who make a great move from the people who stay stuck. I put together a full downloadable guide, the Henderson Move-Up Buyers 2026 Guide, with worksheets for all 5 questions, a side-by-side comparison of all 3 financing options, and a step-by-step checklist for executing either path. It's free. Go to the link in the description, fill in your name and email, and I'll send it straight to your inbox. If you found this video helpful, please hit subscribe. I put out new videos weekly covering everything you need to know about the Henderson and Las Vegas real estate market. And if you're ready to actually start planning your move, reach out to me. I work with move-up buyers in Henderson and Lake Las Vegas every week. There's no pressure, just a real conversation about what makes sense for your situation. That's it for now. I'll see you on the next video. Oh, and hey, if you haven't seen last week's video on the island at Lake Las Vegas, go watch that one now. I'll see you over there in a couple minutes.